What's going on, guys? My name's Emmanuel and welcome to my channel. It's the end of yet another green week in the stock markets, and I hope you also had a green week. Today, guys, I'm excited to reveal two new companies that I bought this week. One is a dividend growth stock and the other I would consider to be a turnaround stock. And I went ahead and topped up on one of my monthly dividend paying stocks that I already own. Also, guys, I did end up selling all my shares in a company that I absolutely loved. And if you follow me on the gram, you already know the company that I'm talking about. And if you don't follow me on the gram, that's a quick plug. It's Emmanuel Finance _. Follow me on there, guys, if you want all my thoughts and inspirations and all the moves I'm making in the market. So with that said, guys, we will also be discussing when the best time to sell a stock is. As well as all that, also, guys, I'll be giving you an update on the Virgin Galactic stock news and why I think it had a huge sell-off this week of over 18% from investors, and also what I'm currently doing with my position. With that said, guys, don't forget to smash that like button as it really helps my channel grow. And if you're new here, I want to say welcome and I hope you gain a ton of value from today's video. And if you do, hit that subscribe button, guys, as we are well on our way to hitting 2K subs. Now, with all that said, guys, let's jump into today's video.
Okay guys, so the first company I bought this week is a new addition and it's called Greggs PLC. The ticker symbol is GRG.L. Ignore this, I don't know where Simply Safe Dividends got this from, but the ticker symbol is GRG.L. And also, guys, I did a deep dive analysis of Greggs earlier this week, which we will link in the description below. So if you haven't seen that, guys, I urge you to definitely check that out, okay? So Greggs is what I would consider to be a turnaround stock. Okay, they got really hit hard by the lockdowns in the UK. Pretty much all of their stores were locked, okay? And as a result, their share price just tumbled. But I've already covered that in my Greggs analysis video, so definitely check that out, guys, if you haven't. Now, my issue with Greggs, guys, and the way I like to invest is, before I decide to buy a company, I set aside a budget. Okay, so for example, Greggs, I had set aside about £1,500 that I was willing to invest in Greggs. But because I can't time the market, I phase it in, right? So I would put in about 300 or 400 quid on my initial investment. And if the price goes lower, then I will top up until I eventually max out my budget from what I intended to invest in the first place. The problem with Greggs is I seem to have timed the bottom almost perfectly, because I initially went in, and you can see here, guys, my total cost price was about $408. So that was just over 300 quid was my initial investment. And that managed to secure me 23 shares. But look, guys, since I purchased it, which was a couple of days ago, it's up 11%. Currently in profit of about $45. But as it is right now, it's just seemed to have shot up. I'll keep that in my watch list, guys. At the moment, guys, there's no annual income with Greggs because the management made the smart move and decided to cut dividends for now, okay? They're trying to preserve as much capital as possible. And again, I have covered that in my video, so the link will be in the description below. The next company that I bought more shares in, guys, is Stag Industrial, and this is my monthly dividend paying company. I've also done a stock analysis video on Stag Industrial, but bear in mind, guys, these guys pay their dividends every single month. So every single month those dividends are coming in, and they also had a really good second quarter, and they were able to collect a lot of their rent from their clients. So I'm very happy with Stag Industrial, and as a result, I decided to add 5 more shares, because I believe in my last dividends portfolio, I only had about 25 shares. So I picked up 5 more shares this week, bringing my tally to 30 shares, as you can see. My cost price per share now is sitting at $29.68. My yield on cost is at 4.85%, and that gives me a total annual income of $43 for the year. And currently my position is also up by 13.7%, which is giving me a current profit of $122 a share, which is currently appreciated by $122. Now, I don't plan to sell Stag anytime soon. If anything, I would like for the stock price to go down so I can actually add more. But as it is right now, guys, my current market value, the amount of money I've got in this company is just over $1,000. And I'm really happy with this position. Okay, so I added 5 more shares to Stag Industrial. Now, the third company I bought, guys, is Apple, and this is a brand new addition to my portfolio. This is a company I've been sitting on the fence on. You know, last week I bought Microsoft. I've really loved Apple. I use an iPhone. I'm recording off a MacBook right now. I pretty much use all their products and services, but I always thought the company was overvalued until recently they made an important acquisition, which I will touch on shortly. But really happy with my position with Apple. At the moment, I bought 2 shares of Apple. My cost per share was $439 per share. My total cost all in was $879. And Apple is considered a dividend growth stock. So they are heavily a growth stock, but they do pay their shareholders a tiny dividend percentage. And the yield is at 0.75%. Nothing exciting, guys. And that gives me an annual income of $7. All right. So my annual dividend income is slowly creeping up, all right? But it's a marathon, guys. It's not a sprint. And you know, I'm really happy with Apple. Now, what company did I sell? Guys, I hate to break it to you. The company I sold this week was Square. I love Square. I've done a stock analysis of Square. I'm really, really bullish on this company. But there was some major news that was announced this week, and you've got Apple to blame for that, all right? And I'll go into that with a bit more detail. But just to give you an idea of my position, I initially bought into Square at about $81 a share. As you can see, guys, it had a huge run up, and I ended up buying more, averaging my price up. So my total average price in Square was about $91 a share, and I sold earlier this week at just over $138 a share. So that gave me a profit of just over 50%, guys. And that's not the reason why I sold. I didn't sell because I'm in 50% profit. You know, I sold because of the major acquisition that Apple made earlier this week. And I'm going to take you to that major acquisition now. And here we go, guys. This acquisition alone made me sell all of my position in Square, and I used the profits to buy shares in Apple and also to buy shares in Greg's and also to top up on my monthly dividend paying company, which was Stag Industrial. And as you can see here, guys, Apple buys a startup to challenge Square in the mobile payments. Okay, now let me read this out for you. It says Apple has reportedly acquired a Canadian startup with technology that could be used to turn every iPhone into a contactless payment acceptance device, directly challenging Square. Okay, guys. And this second part of the article, guys, was an important game changer for me. It says Bloomberg says Apple is paying $100 million to buy MobiWave. So MobiWave is the startup, a maker of tech that allows mobile devices to accept in-person payments without additional hardware, guys. And here you've got an image that portrays this. So just think about it for a second, guys. Apple have now purchased a company that will enable iPhones to take payments from your card, and you don't have to buy or purchase any additional hardware. Now think about it. Square, of course, Square has the Cash App side to the business, which is all well and good, but the main revenue generator for Square alongside Cash App is their hardware device, is their point of sale solution device for small businesses. But if I'm a small business and I own an iPhone, right, and I'm able to record a sale and take payment from my iPhone without having to purchase the additional Square hardware, guys, it's a no-brainer. It's a no-brainer. And I really think if I was Jack Dorsey right now, I would be really nervous about this acquisition. Okay, so I looked at this acquisition and I thought, man, if I had to go into a fight and I had Apple or Square in my corner, who would I choose? It's got to be Apple, guys. You know, it's got to be Apple. And that's the reason why I sold all of my Square positions and I started to use the profits to purchase Apple stock. So now I want to segue into when is the best time to sell a stock. Okay, guys. And for this, I mean, I'm not an expert. I'm going to look to the expert, and that's Warren Buffett, arguably the best investor of our generation of all time. Okay. When does he suggest is the best time to sell a stock? And he's been quoted in the shareholder meeting as saying, we would sell if we needed the money for something else, a more attractive opportunity or a more attractive company, okay? And also there was an article that covered that shareholder meeting. Buffett decides to sell stocks because of a change in fundamentals or a change in a competitive landscape. And guys, that is the main reason why I sold Square. I think the landscape for POS payment solutions has changed with Apple stepping into the game. I hope Square can really stay in the ring with Apple, but I just don't see it, guys. If I have an iPhone and with my iPhone I'm able to take payments from my customer's card with my iPhone, I just don't see the point of purchasing a POS system from Square. Now, don't get me wrong, guys. I keep on stressing their Cash App is also a game changer. I think that Cash App is a really strong catalyst for Square. But my initial investment in Square from the beginning was for the POS payment solution. And I think with this acquisition from Apple, it really has changed the competitive landscape and the moat that I believed Square had. They no longer have. And I'll be really nervous if I was Jack Dorsey. But Jack Dorsey is a great CEO. We've seen what he's done with Twitter. We're seeing what he's doing with Square and Cash App. And I think he'll be all right. But personally, I'm able to sleep better at night knowing that my money is invested in Apple. So with that said, guys, when is the best time or the worst time to sell a stock? And I am guilty of these 2 points, okay? So the worst time to sell a stock is because the stock prices has plunged, or if the stock price has increased sharply. I've made this mistake in the past. I've been investing properly for the past 6, 7 months, and in that time, I've seen some prices plunge, I've seen some prices increase sharply, and I've made both mistakes. But the more I've learned and the more I'm reading Peter Lynch's books, Warren Buffett's books, Benjamin Graham, I'm fully understanding the best time to sell stocks. And I agree with what Warren Buffett says, as if something more attractive presents itself, or if there's a change in the moat or the competitive landscape. All right, guys. So on the topic of stock prices plunging, what is causing the massive Virgin Galactic sell-off, guys? Notice how I segued into different topics, guys. It's crazy. So if you haven't hit that like button, that deserves a like. Come on, guys. Smash that like button. But yeah, so I think the reason why investors are selling off Virgin Galactic right now is a combination of two factors, guys. On the 3rd of August, guys, Virgin Galactic missed on their Q2 earnings by a few cents, okay? However, the losses did not exceed the previous quarter, despite them being in a much worse situation, which was the lockdown. They weren't able to run their business, and when they did eventually come back, they couldn't come back with their full workforce. They had to implement social distancing rules, but they still did not exceed their previous quarter loss. And I'm going to take you to that now. Okay, so here we are, guys. On August 3rd, the analysts estimated that Virgin Galactic would lose 26 cents a share. However, they reported a loss of 30 cents a share, giving a surprise of minus 13%. I mean, come on, guys. We're talking 4 cents. They were 4 cents off the analyst estimates. It's crazy. And if you look at their previous quarter, this is what I mean. They made a loss of 30 cents a share. So I do think the sell-off of over 18% was a bit of an overreaction from investors. But also, guys, remember, there is one more factor that we need to consider as for a reason for that sell-off. And that factor is this, guys. During the Q2 earnings call, Virgin Galactic announced a new public offering, which will essentially dilute existing shareholders. So if you're an existing shareholder of Virgin Galactic already, your shares are going to be diluted, guys. And this was announced pretty much because they need to raise more capital. However, remember, more shares on the market means less value for existing shares. So it's a simple supply and demand principle, guys. They're flooding the market with millions more shares, which will pretty much devalue our shares. So I'm on Virgin Galactic's investor relations page, and as you can see here, guys, it says Virgin Galactic announces proposed public offering of common stock. Okay, so that's them saying they're going to sell more shares to be able to raise more capital. So now moving on to August 5th, it says Virgin Galactic announces pricing of the public offering for common stock. And when you read into this article that was published on the 5th of August by Virgin Galactic, their new public offering is going to be priced at $19.50 per share. Now, I'm a shareholder of Virgin Galactic. At the moment, my average cost price for Virgin Galactic is sitting at $22. So you mean to tell me they're going to offer 23.6 million shares at a much cheaper price than I paid? Now you can see the incredible frustration from investors. Now, for me, I'm a long-term investor and I do understand this move. It's to raise capital. I'd much rather Virgin Galactic do what they can to raise capital and stay afloat, and all of my shares are essentially protected because I can only lose all of my investment if the company goes bankrupt. So they have to do what they have to do. But if I'm an investor who is looking for short-term growth and I've seen that they're making a public offering, so they're diluting my shares of the company, and also the public offering is at a cheaper price than I actually purchased it for in the first place, I ain't gonna lie, I'm gonna dump my shares as well. And as you can see, guys, on the 4th of August, so a day literally following the earnings call, it's dropped by just over 18%. So investors definitely didn't like this move. It must have rubbed people up the wrong way. And if I was a short-term investor, I would have probably just sold out and say, forget this company. But I'm a long-term investor with this company. I understand that it's going to be a rocky road, and I'm prepared to hold through the market price gyrations because I am thinking long-term. And I do think them being the pioneers of space travel and tourism, they are going to make a lot of mistakes. They are going to need to raise more capital. It's just the nature of the game, guys. And you've got to be prepared to stomach all of this. If you haven't got the stomach for a company like Virgin Galactic, then you might as well cut your losses now and get out of the stock. But guys, I don't want to leave you on a bad note. I mean, Virgin Galactic, there were some incredible highlights from their Q2. So I would advise you go on the investor relations page for Virgin Galactic and read through all of these highlights that are listed on here. But you know how we do, guys. I've read through it and I've also made some key points, all right? So the key points for me, guys, was the One Small Step initiative has received over 700 deposits as of July 30th, 2020. Now, if you haven't seen my Virgin Galactic stock analysis, again, I will link that in the description below. Definitely check that out. But as of the time of recording that video, they had only 400 deposits. Now they are up to 700. And remember, guys, with the One Small Step initiative, every person who pays a deposit, the minimum is £1,000. Okay, so you have to pay £1,000 for you to be registered on the One Small Step initiative. So they have received an extra $300,000 since my last video, because at that time they only had 400. Now they're up to 700. So that shows that there is an increase in the interest of people wanting to go to space, of course. The next highlight, guys, is that they entered into a deposit agreement for orbital space flights with 12 customers. So pretty much, guys, I've got here that they're securing the bag. Okay, so all of these 12 customers are prepared to pay 250 grand or whatever the ticket price is, but they're already now into deposit talks, which is great. And for me, this shows that this thing is becoming a reality, guys. So if you are a long-term investor, take heed from this highlight, guys. This is becoming a reality. Okay, guys, and also in my Virgin Galactic stock analysis, I spoke about Richard Branson also being one of the first to go into space with the Virgin Galactic rockets. And they've also reiterated that if 2 of the upcoming test flight go as planned, which I pray to God they do, then Sir Richard Branson would look to fly into space in the first quarter of 2020. Now, you can imagine, guys, if these test flights don't go as planned and Richard Branson doesn't go up into space in the first quarter of 2021, man, if you thought that 18% decline was bad, it's going to get worse, guys. So brace yourself, cross your fingers, cross your toes, cross whatever can be crossed that these 2 upcoming test flights go as planned. We need Richard Branson up in space in the first quarter for the value of our shares to fly to the moon, guys, all right? And the final highlight for me, guys, was that they unveiled an initial design concept for a high-speed vehicle, okay? So I actually haven't covered the high-speed vehicle side of the Virgin Galactic company, which I will cover in another video, guys. I don't want this video to be too long, But those are my highlights, guys, from the Q2 earnings. Definitely check it out. Remember, I've showed you in my previous video how to access investor relations of a company. If you haven't, check out my video, how to start dividend investing. I've got it all detailed there.
Peter Lynch said, behind every stock, there is a company. So remember, guys, we are buying companies. We're not buying tickers. If you understand the company and you love the business model and you also love the direction in which the company is going in, then back it with your investment and be prepared to hold through the market price gyrations. And don't get scared out of a stock, guys. That's the most important thing. Revisit the portion of this video where we talk about when's the best time to sell stocks according to Warren Buffett. But at the end of the day, guys, make sure you do your own due diligence and your own analysis before you decide to invest in any stock. Peter Lynch said, investing without research is like playing poker and never seeing your cards. All the links to help you with your investing are in the description box below, guys, so check out those links. Plus, my broker Trading212 will send us both a free share if you sign up using that link in the description below, guys. With all that said, smash the like button if you haven't already, guys. Hit the subscribe button and the notification bell if you want more content from me. Thank you for watching, guys, and I'll catch you in the next one. Peace.